All right. Good morning, everybody, and welcome to another mobile session here on both Facebook Live and also on YouTube. My name is Patrick France, Senior Instructor here at VectorVest. Every single Thursday, I come to you guys live talking about the VectorVest Stock Advisory app. So before we jump into it, though, just to make sure you guys can hear me out there, if you can, let me know down in the comments below. If you can hear me, make sure smash that like button already. Let's get that started. All that helps us out with the YouTube algorithms, also the Facebook algorithms. So regardless of which side you're on, if you can hear me out there, just let me know. Make sure everything's coming through fine for you guys. Give me one moment while I try to make sure this is all set up. Facebook side seems to be a little slow here today. There we go. Perfect. So now we've got that. Let me get so I can see anybody commenting in. All right. Where is that? Why is that not showing? Today? Right now? Yep. Should be good. Let me make sure. Bear with me for one moment. I do apologize, folks. Facebook, as always, acting a little funky here, so just gotta unfortunately deal with it here. Happening now. There we go. Which is why we're starting to stick more with the YouTube side of things, because Facebook's just becoming a little bit too much changing things, always having issues. So I do apologize for this delay right out of the start, but just want to make sure everybody can hear me out there. There we go. All right. Should be good on that now. Set up live video. Okay. All right. Why is it not starting? Okay. All right. So we may just be here. Yeah, the metaverse seems to be having some issues, so it could be affecting it here. Maybe we'll just do it here on YouTube for today. That's fine with me. Hey, that works. If Facebook's gonna have issues, then we'll go ahead and just stick with the YouTube side. All right, so that's it. All good on that one. So welcome everybody. For everybody tuning in for the very first time, my name is Patrick France, Senior Instructor here at VectorVest. Every single Thursday, I come here live with you guys to talk about the VectorVest Stock Advisory app. If you're not familiar with it, it's one of the most comprehensive trading apps out there to help you make smarter, faster, and better investing decisions. So, as always, we start off by taking a look at what's going on in the market here today. Then we'll dive into our topic of discussion, and then as always, we finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So, as always, I do ask if you want to see your own stocks analyzed, make sure to stick around towards the end, and we'll make sure we get those analyzed for you there. All right, so starting off here right now, as we can see, we are one tick into the red. The market is mildly bearish, and VectorVest still does not advocate buying any stocks at this time. I think we can all agree by following that simple guidance here, that's definitely saved a lot of investors out there a lot of money, and also a lot of sleepless nights as well. We've been in that situation where we've not been advocating to buy any stocks for quite some time or err on the side of caution. And with what's been going on in the market, I feel like that's definitely been some of the best advice you could get out there. As always, though, if you want to see more detailed descriptions of what's actually going on in the market, also what news you need to be aware of for the next day, how to prepare yourself and all of that, make sure, as always, to check out the daily market update right here from the homepage here. But then as we scroll down, we take a look at the color guard. Now the color guard analyzes the overall trends of the market, and we really focus on three main aspects. First and foremost is the price, which is talking about the prices of VectorVest Composite. Now, the prices of VectorVest Composite is an arithmetic indexed average of about 9,100 stocks that we track in the US market each and every day. This gives you a better representation on what's actually happening in the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100 or even the S&P's 500, but it's looking at 9,100 stocks. So this gives us a better feel for what's actually occurring in the markets. Then the next indicator we look at is going to be the RT, which stands for relative timing. Now the relative timing is cast on a scale of 0 to 2, and above 1 is good and below 1 is bad. The relative timing is looking at the short-term price trend of the market, and so as we can see at 0.88, that is below the level of 1, which tells us the short-term trend in the market is still down currently. And then the third indicator we're going to look at is the BSR, or buy to sell ratio. Now, every single day here at VectorVest, we give a buy, hold, and sell rating on every single stock. Well, we use that ratio, or we use that difference between the buys and the sells to get an idea on the overall market health. So if the buy to sell ratio is above 1, that tells us there's more buys than sells in a database, or that there's overall market strength. And if the buy to sell ratio is below 1, as it is now at 0.46, that tells us that there's more sells than buys in the database, or overall market weakness. So as we can see, just turning red as we speak. So we are moving lower day over day and week over week. So after the buy to sell ratio, we then get the MTI, which stands for the market timing indicator. Now, the MTI is cast on a scale of 0 to 2, and it's looking at the underlying trend of the market. So as we can see at 0.73, that tells us the underlying trend of the market is still down here. After that, we then get the trend column, which shows two parts of the trend each and every day. So the first part looks at the primary wave, or simply the short-term or weekly trend of the market. As we can see, it is down since the price of the VectorVest composite is lower than it was 5 trading days earlier. Now the second part is looking at the underlying trend, or simply the MTI. So since the MTI is below 1, the underlying trend in the market is also down. JM is asking, is the Facebook stream on? It is on my end, but for some reason Facebook is having some issues and it didn't want to start up here today. So instead of spending time trying to figure that out and worry about it, we're just going to stick here on YouTube side here today. So that's going to be it for that one. Since Facebook seems to not want to be working properly, we'll just skip that and just stay here on YouTube here today. All right, so after the trend, we then get the calls column, which stands for our confirmed calls. Now, our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get into the market and our last signal we get to get out. As you can see, we still remain in that confirmed down situation as of today. So as always, every single week, and even if you're using this out on your own, throughout the week, we always want to take a look at the advanced declines to get an idea on what's occurring, or the overall health for the individual day or the specific day. So when we look at the advanced declines, we want to see a 2-to-1 bias in either direction. So if we're going to be placing a bearish trade, we want to see twice as many stocks declining than advancing. Well, right now we have 70% of stocks moving lower and also about 18% of stocks moving higher, so clearly meeting that 2-to-1 bias. Therefore, if you're going to be entering into a bearish position here today, we have the advanced declines confirming that action. Also, I saw we just got a few new members here for VV Nation. Welcome, everybody. Hopefully you guys are doing well. Welcome to the community. So as always, we want to take a look at the major indices at the bottom. So the Dow is down about 1.3% for the session. Nasdaq 1.7% down. S&P down 1.4%. Overall, the VectorVest composite down 1.34% for the session. So markets were looking okay yesterday, but then we have some news coming out, or we had the economic data coming out for jobless claims, better than expected. So what we've been seeing here, the common theme we've been seeing over the last few months is good news seems to be bad news, because that tells us that we could potentially be seeing the Fed picking up their pace on how fast they're going to be hiking up interest rates. Also, the number of hikes that they have. So gives a little bit of fear out there. Also, starting to see talks about the Russia-Ukraine crisis coming back into the market, even though things were settling down. Nothing happened yesterday, so of course we got to talk about it today and make that a major headline to start driving the markets down even lower. But what can you do? This is why we never try to predict the market here at VectorVest. This is why we consider ourselves trend followers and we let the trend be our friend. All right, so what we're going to be talking about here today is some of the best stocks from the major indices. And this is something we've never really done throughout the few years that we've been doing these live streams, is taking a look specifically at this section. So what we're going to do is we're going to scroll down, and on the bottom of the section, or the bottom of the left-hand side in the more section, you see the market watch list. So we're going to utilize those here today. So we're going to jump into the market watch list. Oh, got to restart it. Apparently I spent too much time on that page. Get it pulled back up. All right, going back down, market watch list. There we go. And as you can see, we have a few watch lists that we're going to be focusing on. We have the Dow Jones Industrials, we have the Nasdaq 100, the Russell 2000, and the S&P 500. You also have a few other great watch lists, such as stocks with weekly options for all you options traders out there, monthly dividend pairs, and also our ETF pairs, bearish and bullish. But what we're going to do here today is we're going to go into, let's say, the Dow Jones. We're going to do all the major indices, and we're going to analyze some of the top performers from there. And this is really the power of VectorVest, is whenever you jump into any watch list that you find here in VectorVest, it'll automatically bring the best candidates to the top of the list and the worst candidates to the bottom. That way, it saves you a lot of time having to find which stock you should be getting into on your own. So out of the Dow Jones, we have American Express. Right now it's down a little bit, but hey, so are the markets. But looking at the 4 indicators at the bottom, let's spend a few moments going over those here together now. So the RV, or relative value, is looking at that long-term potential of the stock. All 4 of these indicators are going to be cast on a scale of 0 to 2. And as always, above 1 is good and below 1 is bad. So the RV at 1.41 tells us this stock has good long-term potential over the next 1 to 3 years. The next indicator is the RS, or relative safety, which is simply an indicator of risk. So above 1 tells us there's less risk associated with this stock compared to the average stock out there. Then we look at the RT, or the relative timing, that short-term price trend indicator. Since it's above 1, that tells us it is in a nice steady uptrend. So VST is a combination of the RV, RS, and RT into one comprehensive indicator. As we can see, that's above 1 as well, telling us this stock is a solid play on both a fundamental and a technical basis. So if you're looking for candidates to get into, well, here's a great looking candidate, a prudent candidate that has good long-term potential, has less risk associated with it, has a nice steady uptrend. It's a favorable stock. We just need to see the market timing start to give us those opportunities to tell us, hey, it's not okay to start buying back into the market here. So very first stock, jumping into the graph real fast. Well, we have a 6-month basis. As you can see, I have the candles, or price shown in candlesticks. I have a 30-day weighted moving average, and then I have the DPO, 20-day DPO at the bottom. And as we can see, price has been steadily rising here. You're seeing a nice steady uptrend. Really, there's nothing you don't like about what we see here. If we zoom out to a 1-year time frame, you see a nice steady rise from bottom left to upper right. And then if we change it, because as always, earnings is the engine that drives stock prices higher. So we definitely want to take a look at the earnings per share on this as well. Zooming in. So we see a nice steady rise in price from bottom left to upper right. We also see a nice steady rise in earnings, like a stair-step pattern from bottom left to upper right. This is the exact formula that VectorVest always advocates to find, or when you're looking for stocks to get into. Because, even though what you see in the past may not predict future performance, but at the same time, if you see the earnings are steadily rising, that tells us the company is still making money, and so therefore that will drive the price higher over time as well. So AXP looks like a solid candidate. Once again, though, we just need to wait for that market timing to really start to improve a little bit more than where we're currently at to get that opportunity to start jumping on board. But this one, really solid looking candidate, nice steady price appreciation. So yeah, very easy, and took a matter of seconds to find a good looking candidate here. Now, if we go to the next one, Apple. No surprise. Everybody loves Apple. We've seen Apple quite a lot. Analyzing the 4 indicators, we see good long-term potential, less risk associated with this stock. You have a nice steady uptrend on a short-term basis. Overall, the stock's definitely favorable. So we look at the graph. The graph looks a little iffy right now, if you ask me, since we are potentially at a lower high. Could be consolidating right now, so giving us a little bit of little bit of caution here, if you will. But looking at the earnings are steadily rising. And once again, earnings are the engine that drives stock prices higher over time. So if earnings are steadily rising, you can expect to see the price steadily rise over time as well. Let me make sure. Yeah, follow Jay. If you haven't, I see we got over 180 people in here today. If you haven't already smashed that like button, go ahead and do so. Make sure to hit that like button, share this with all your friends, share it with all your family, because all of that helps us out and supports us continuing to grow this community, and helps us out with the YouTube algorithms. All right, so Apple, another good looking candidate. I'd like to see it break out of this consolidation though. If we zoom in, let's say to a 3-month time frame, you can see here pattern. Maximize it. There we go. We have the pattern of lower highs, but also higher lows being formed. So for everybody out there, for our Jockey Club members, VV Nation out there that loves it, this would be a wicked wedge. Unfortunately, we can't draw those lines on the graph, but you can visualize it here. And if you have, either your broker or if you have the desktop app, you can draw those to show that wicked wedge as well. But if it breaks out at the upside of that wicked wedge, that could definitely be an interesting play right there. All right, so getting back into it, taking a look at the next one, Chevron. So I've been talking about, for anybody who's been with us for a while, that I've been saying oil's been a phenomenal play ever since about November of 2020. After the elections, oil looked like it was ripe for the picking, and so far it's done nothing but continue to go up. Well, here's a great play if you want to take advantage of oil. If you're tired of, getting into those more lower dollar stocks, those more aggressive plays that can have bigger swings, Well, find yourself one that has good long-term potential, less risk associated with it. It's been in a nice steady uptrend and it's overall favorable, because that's what Chevron is here. Even with it pulling back at 1.21% for the session, it's still in a nice steady uptrend. Stocks pull back from time to time, but as we can see, this 30-day weighted moving average has been a fairly decent support level over the last few months. We've touched it here, bounced off, touched it here, bounced off, consolidating again. So if we can see a bounce once again, that could be that entry point that we're looking for. Drew, please don't do that. That's not a good idea. I talk about them quite a lot, and it's too early for everybody to have that good of a day starting off. Hopefully soon there, Jay. When will the app have the wedge function feature? Hopefully soon. Hopefully soon. All right. So Chevron though, nice steady rise in earnings. Earnings flattening out a little bit, pulling back a little bit, as we can see right now, which may be a little bit of a cause for concern. But until we see that really reflected in price, so far prices in gas continue to go up. Therefore, gas stocks going to continue to go up. So yeah, Chevron, not a bad play. So those are just a few of the top. Those are the top three. As you can see, there's more you could go through, but we're going to jump in from the Dow. Let's go into the Nasdaq now. Now, as we all know, as we've been talking about, this whole sell-off that we've seen starting back in November of last year has really been tech heavy. So the tech stocks have been have been beaten up probably the most out of any other area of the market so far. So taking a look at these, a lot of these could be grossly oversold or have some decent opportunities to buy some really good stocks that may not, or that have been beaten up, so that way you can get a bargain on them. So looking at our first one, EXC has good long-term potential, but this is a more aggressive play because it has more risk associated with it. Looking at the RT 1.72, it's in a pretty strong short-term uptrend, so overall stock's favorable right now. Now, as we can see, it did gap down, probably with an earnings play. Earnings are starting to decline, so maybe passing up on this one for the time being. But if you wanted to take advantage of it, one way you could potentially do so is put a line in the sand at the low of that gap down candle from the 2nd of February. And as long as price stays above that point, well, then that means the stock is either moving sideways or going up. And that's a good thing. But as always, we do want to make sure that if you're jumping on board with this, you're jumping on board when the market timing tells us it's a good time to be buying. With the earnings declining, that definitely shows that risk that you're taking with it. So depending on your personal preference, you may or may not take it. If not, just simply move on to the next one. Micron, a name that most people should be familiar with. This stock has great long-term potential. It's safer than the average stock out there. Has a pretty decent short-term uptrend. Overall, the stock is favorable from both a fundamental and a technical basis. So if we take a look at the graph, we can see quite the volatility. No surprise there, especially with what's been going on in the market. But if we zoom out to a 1-year time frame, we can see that really ever since the market started tanking back in November, this stock has been steadily moving higher. We look at the earnings also steadily moving higher. That means this company is making money now and also expected to continue to make money 12 months down the road. If you're brand new to VectorVest or this is your first time here, the earnings per share that you see at the bottom isn't what you'll find if you go to Yahoo Finance or your broker. This is something unique here that you're not going to be able to find anywhere else. It's not just taking the current earnings periods and current earnings information out there, but it's also taking a forecasted 12 months down the road for earnings per share. So that way, not only can you see if the company's making money, but you can also see what analysts expect the company to be doing a year from now as well. All right. So Micron had a quick sell-off, now back, rebounded very, very sharply, a V bounce, if you will. And if we can see it take out that high there, could be easily $100 plus in the next week or two, even with as fast as that thing is moving. And then Google. So no surprise, some of the bigger tech names have a bigger price tag, but with Google, you can see good long-term potential, less risk associated with it. However, the timing is not right, but neither is the overall market timing. So this could be one that once the market timing starts telling us it's okay to be buying, then we can see that timing picking back up. And right now it's below that level of 1. Typically, above 1 is favorable, but realistically, we want to see it at 1.1 or higher. Anything below 1.1 tells us the stock is, yes, it's in an uptrend, but it's really just treading water right now. And with higher inflation, we got to have higher moving stocks to be able to offset that inflation right there. Overall, it's a good stock because it has fundamentals, but once again, we really need to see that timing pick back up. And then AMAT, the next one, good long-term potential, less risk associated with it because it has consistent earnings performance. But once again, the timing is off. At 0.84, it is in a steady decline. It's a good stock because it has strong fundamentals, but we need to see that timing start to pick back up here. So as we can see, no surprise that the Nasdaq stocks have not been performing as well, whereas the Dow has been really the main index that's been doing extremely well in 2022 so far. So if you're looking for bottom fishing opportunities, this could be a great way to do so. Once again, once we get that timing to really start picking back up. All right, so we've got out of here, taking a look at the Russell 2000. So these are going to be your more aggressive plays, more of your smaller cap stocks. But as we can see, Alcoa, been one of our top VST stocks for quite some time, coming into the top of the list. Go take a look at the graph. This stock, great long-term potential, a little bit less risk than the average stock out there, but look at that timing, 1.88, really strong short-term uptrend. I talked about it last night in our hot stocks during our daily color guard report, but the timing, or the reason why we're starting to see that picking up is because you're noticing Alcoa, if you take a look at the news on it, they're increasing their earnings revisions, moving them up for the year. And, you know, if the company is saying, hey, look, we're making more money, we're expected to continue to make more money, you can expect to see a lot of big money coming into that to take advantage of that profit sharing. So overall, definitely a good play here. Taking a look at the graph, pulling back a little bit here today, but not much, less or a little bit more than 0.5%. But look at that earnings. Earnings are steadily rising, price following along right there with it. And then Eagle Bulk Shipping. So I've seen a lot of people talking about shipping recently, within the last couple of days, really the last week or two. So shipping has been one of the big concerns. You know, there's been a lot of supply chain issues throughout the world really over the last year or two. And this one, we're definitely seeing starting to take off. They need shipping to be able to move these goods, to be able to, you know, relieve some of that impact from the supply chain issues. And looks like they're taking advantage of it to make themselves more money. This one though, good long-term potential, does have a little bit more risk with it, in a really strong short-term uptrend. So overall, stock is definitely favorable here. Let me make sure. Can you see the market timing graph on the mobile? So Albert, you can see parts of the market timing graph, not the full thing like you can with the desktop. Hopefully that should be changing soon. I can't give too much out about it, but that is one of the big things on my list of new updates or new features to be coming out. So hopefully soon we can get more information on that. All right, but yeah, taking a look at the graph, you can see definitely a little bit more volatile play because we've seen a lot bigger swings higher and lower with this one. But you have realistically a triple top. Let's maximize it so you guys can see it out there. Where is it? There we go. So we have a triple top right now. We have 1, 2, and 3 touches on that line right there. And if we break above that point, expect to see a nice run coming into this. You also have, you know, a support floor down here at these lows. Where is that? Right around 36, 37, let's call it. So it's been trading in a channel from about 55 down to about 36 or 37. So if we can break to the upside of that, this could definitely be a great looking candidate to jump on board with. All right. Going back, taking a look at one more. EPM, so another petroleum stock, a little bit lower. Obviously, being in the Russell 2000, you are going to have more volatility, a little bit more aggressive stocks in this index. But this one, great long-term potential, but does incur a little bit more risk associated with it. Really solid timing, strong momentum play right now. So overall, stock is definitely favorable. We can see broke out past this resistance level right here. Oh, let me maximize it so you guys can see it. There we go. So broke out of that resistance level and now starting to run. One thing I will say on a short-term basis, be careful of what we're seeing with those most recent candles. If we zoom in, let's say to a 1 month, these tall upper wicks typically indicate a lot of selling pressure. So this would be one you'd want to add volume on to see what that tells us as well. One thing I will say though, looking at the earnings were negative about a year ago, now turned into the positive territory and continue to move higher. Definitely a strong sign for the company. If we change it though, let's go to our graph settings, add volume on here, and take a quick look at that one. Maximize it. Let's go 1 month. So volume, while it was strong right here yesterday, volume is relative. So I'll talk about it briefly. I talk about it a lot in our jockey club, but I'll talk about it briefly here today. So when looking at volume is relative to what's around it. So as you can see, yeah, we had strong volume here today or yesterday, but the real strong volume comes from 2 days prior to that. So we go take a look at that candle. That is the main day you'd want to focus on. So yes, you saw some profit taking going on here yesterday, but the volume is telling us that the main focus is going to be that up day. And yeah, some people took profits, but the majority of people are still in it to the upside. And there was some people maybe getting out, but you may see a temporary pullback, but the overall money is still favoring the upside on this one. All right, so getting out of here, jumping back out of it, taking a look at the S&P 500. So a lot of stocks in the green here, even with the down day. NUE coming up as one of the top performers. This stock has great long-term potential. It has less risk associated with it. You're in a really strong short-term uptrend. So overall, the stock is definitely favorable. If we take a look at the graph, let's go ahead and change that graph a little bit. So we'll go to the indicator at the bottom, put on earnings per share once again, go back, maximize it here. Oh, there we go. So looking at the price, nice steady rise from bottom left to upper right. Also, look at earnings. Earnings are steadily rising from bottom left to upper right. That's exactly what you want to see. Looking at the price action, we can see that we do have some potential resistance coming in where we're currently at. But if we can break above that, we can get really closer to that 130 range. We could definitely see a continuation in this because that shows people are going to be jumping on board and that, the buys or the bullish investors are still here and the bears really don't have too much to go off of at that point. All right, going back. DVN, another energy stock, no surprise there. This one, great long-term potential, has a little bit more risk than the average stock out there, really strong short-term uptrend, so overall the stock is definitely favorable. Looking at the graph, no surprise, earnings steadily rising from bottom left to upper right, price also steadily rising from bottom left to upper right. And then last but not least, we'll take a look at one more, FANG. I know a lot of people are familiar with this one. You guys have been asking to analyze it for weeks now, if not months. It's been one of our top VST stocks for a while, but this one, another great looking candidate, another prudent stock. You have great long-term potential. You have less risk associated with it, really strong short-term uptrend. So of course, overall, the stock is definitely favorable. So just in a matter of seconds, we have found a lot of great stocks to get into. All we did once again, we came in here, let's say the market was telling us it's okay to buy. We just went to the left-hand side, check out the market watch list, and went through the major indices and found the best stocks in those indices all within a few seconds. Yes, I spent a little longer because we were going into each stock specifically and describing all of that. But if you're out there on your own, you're looking for a good candidate, this is a really simple way to find really good stocks that can help you make money in the market. So if you guys have any questions with this, feel free to ask them, but hopefully, this seems fairly straightforward. One, start off with the market timing. Make sure that it's okay to start buying into the market first and foremost. 2, pull up the market watch list. And 3, find the best stocks in each of the major indices. If you're somebody who prefers tech stocks, then start off with the Nasdaq. If you're somebody who prefers, industrials, start off with the DJI watch list. So this is a great way to find good stocks very, very quickly to help, save yourself a lot of time and get into stocks that you don't have to necessarily worry about too much that because you know that you're buying the best of the best essentially. All right, so with that, that's going to be it for this part of the session. If you guys have stocks that you want to see analyzed, start throwing those in the comments section. I'd be glad to analyze those. Also, if you haven't already, which I know a lot of you haven't already, smash that like button if you've been enjoying today's stream, because all of that helps us out with the YouTube algorithms. So if you haven't done that already, click that. Let's make sure I got the corner right there. There's a little thumbs up button. Smash that real fast. All right, so Robert coming in with a few stocks to take a look at. As always, to analyze any stock out there, all you have to do, tap on the magnifying glass in the upper right. And let's start off with PRPO. PRPO. So PRPO, about average long-term potential, a lot of risk associated with this stock. It's in a steady decline, so overall the stock is not favorable right now. I'd be careful with this one. Yes, it's up a little bit here today, but the overall trend is steadily moving lower. You have a dead cat bounce here, dead cat bounce here. I'd be extremely cautious with this one. SUN, sure, we can definitely take a look at that. So SUN has great long-term potential, about average risk associated with it. You're in a steady short-term uptrend even with the pullback, so overall, definitely a good stock. LCID, looking at Lucid. So Lucid, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, stock's definitely not favorable here. SIVB. SIVB, good long-term potential, less risk associated with this stock. Even with the pullback here right now, you are in a steady short-term uptrend, so overall stock's favorable. One thing I will say, keep your eye on the relative timing though. My personal threshold is 1.1, and it's getting pretty close to that. So as long as it stays above 1.1, everything should be good, but just be careful of that and keep your eyes peeled on that. TS, let's go ahead and take a look. So TS, good long-term potential, but a little bit more risk associated with it. Really strong short-term uptrend. Overall, definitely a favorable play. Pulling back a little bit, but once again, so are the markets, so no surprise there. VMAR. VMAR, poor long-term potential, a lot of risk associated with it. However, on a short-term basis, you do have a strong uptrend, so overall the stock is favorable. This is a speculative play because the RV and RS are both below the level of 1. So if you're a momentum trader, this is a great looking candidate to keep an eye on. But if you're not, this would be one you'd probably stay away from. Let's see, ARCH. ARCH, good long-term potential, but a little bit more risk than the average stock out there. You have a really strong short-term uptrend, so overall, stock is definitely favorable here. Let's see what else we got. UPST. UPST, so Upstart. A little bit better than average long-term potential, but a lot of risk associated with it. You do have a short-term uptrend starting to form, so overall the stock's slightly favorable. A little bit better than average. All right, let's see. AMAT, we just analyzed AMAT a few minutes ago. So FNGU, I gave my thoughts about it yesterday in the Jockey Club, or 2 days ago in the Jockey Club. But when analyzing any ETF, VectorVest makes it easier than anywhere else out there. Because RV and RS are always going to be pegged at 1 because they don't have quarterly earnings. They don't have financial statements you have to analyze. So when looking at an ETF, all you have to really focus on is the RT. RT is below 1, so therefore this is not favorable currently. But as I talked about in the Jockey Club, I'll talk about it here. We do have a sell-off in the overall equity, but we're starting to see a wicked wedge being formed. If you connect these lows here, you have higher lows being formed. You also have lower highs being formed. So with that being said, after a sell-off, when you start to see it consolidate, that's usually a sign if it breaks the upside, you're going to have that explosive move to the upside. So typically, when the market's moving higher, been in a long, steady uptrend, and you start noticing consolidation, that's a sign that things could be reversing in the near future. Well, when the market's been in a steady decline like it has been, and then you see consolidation, odds are that you're going to see it break to the upside and start a new uptrend. So that's what we're keeping an eye on with this one. But for now, short-term trend is down. Just be careful. Just wait for that breakout if you to occur before jumping on board in either direction. All right, let's see what the next one is here. SENS. So Senseonics, one, I like this stock. It was doing great. Everything was looking good. They got the approval, and then the stock drops to the stock craters. So, it's a classic buy the rumors, sell the news kind of situation. But this one was a speculative play, poor long-term potential, a lot of risk associated with it, and now the timing is well off. So overall, the stock is not favorable. But if you like the play from the initial beginning of it, nothing has really changed. Their company is making money. They're expected to continue to make money, so could be a good opportunity to load up at a cheaper price, help cost average down a little bit there. A PPH app harvest. So poor long-term potential, a lot of risk associated with it in a steady decline. So overall, stock is not favorable right now. ASML, good long-term potential, less risk associated with it. So solid fundamentals. However, the timing is off, not the right time to be long in it. So therefore, stock is a good stock, but you need to see that timing pick back up. Tesla, TSLA. Tesla, great long-term potential, less risk associated with it. However, the timing is off. Nasdaq stock, so no surprise, been getting beaten up pretty bad. Overall, it's a good stock. Just need to see the timing pick back up. Let's see. MRO, good long-term potential, less risk associated with it. Really strong short-term uptrend. Overall, stock is definitely favorable here. GME, we'll take a look at GameStop. So GME, poor long-term potential, a lot of risk associated with it. You are in a steady decline, no surprise. Overall, the stock is not favorable, but markets are down here today. GameStop's up here today. New uptrend starts or seems to be forming on a short-term basis. You seem to have found this floor. It's starting to pick back up. Really need to see it continue to get some signs of life back into it here. SENS is a long-term play. It's supposed to be volatile. Yeah, but it's supposed to have good news. Good news should help continue that price move higher, not drop it down to not crater the stock price. All right, let's see. XELA, poor long-term potential, a lot of risk associated with it. You're in a steady decline, even with it being up 15.5% here today. Overall, stock is not favorable. HUN, good long-term potential, a little bit less risk than the average stock out there. It's in a steady uptrend. Overall, stock is definitely favorable. LMT, average long-term potential. You have less risk associated with it though. You're in a steady uptrend, so overall, stock's definitely favorable here. Provide 5 or 10 minute. Jacana, I do sometimes. I tend to talk about the Canadian sessions sometimes. So I do cover the Canadian markets from time to time though. Not often, but I do sometimes. All right, GT, let's take a look. GT, good long-term potential, but does have more risk associated with it. You're in a steady decline, so overall, stock's basically average right now. BLDR, we'll do this one and then a couple more here. So BLDR, good long-term potential, less risk associated with it. However, it has been in a short-term decline. Overall, it's a really good stock. Just need to see that timing pick back up. And then MMTLP, not finding that one there. VLTA, poor long-term potential, a lot of risk associated with it. You're in a short-term decline, so overall, stock is not favorable here. And then we'll do last but not least, let's do GTE. So GTE, good long-term potential, but does have more risk associated with it. You're in a really strong short-term uptrend. So from a momentum play, could definitely be a very interesting candidate to keep an eye on. From somebody who's more of a long-term investor or a longer-term swing trader, there's a lot of risk associated with it. So be careful of that. But from a short-term momentum standpoint, definitely a favorable candidate to keep an eye on. All right, so let's jump back into the overview page. And if I didn't get to your stocks, if I didn't get to analyze your stocks, I do apologize. But as always, if you are a subscriber, just pull up the stock advisory app, sign in, tap on the magnifying glass in the upper right, and enter in your own symbols. And you can do this wherever you are on the go in 10 seconds or less, just like we do here. And if you're not a subscriber, what are you doing? Click on the link down in the description below, sign up for the 2-week free trial, and put it to the test. Seeing is believing. So looking at the market right now, we have still one tick into the red. The market is still mildly bearish, and VectorVest still does not advocate buying any stocks at this time. Typically, we see a swing happen throughout the day or throughout our sessions here, but not really seeing that so far. Seeing the buy to sell ratio improve a little bit. Looking at the advances and declines, advances have picked up a little bit now, sitting at a level of 21%. Decliners now sitting at a level of 68%, but still well above that 2-to-1 bias that we like to see. Looking at the major indices, the Dow's coming off of its lows, now sitting down about 1.15%. Nasdaq now down 1.3%. S&P down 1.1%. VectorVest Composite down 1.1% as well. So we can see the markets are starting to improve a little bit, but then again, we're still down significantly on all the major exchanges, and we still don't have the advance and declines favoring the upside. So therefore, err on the side of caution, follow the guidance, be patient. On that note, it's been my pleasure being with you here today. As always, if you haven't already smashed that like button, do so right now. That helps us out continuing to grow this awesome community we've built here. So if you haven't already, do that before we leave for the day. And then on that note, have a great rest of your trading day. Make sure to tune in at 2 p.m. Eastern as Glenn does Trending Thursdays, where he talks about the major headlines having an impact on the markets here. So if you want to tune in for that, go check him out at 2 p.m. Eastern right here on YouTube, also on our Facebook page as well. So until next time, take care, adios, and toodles.